This is the Growth and Value Podcast, empowering and inspiring stock investors, helping you take control and make a difference with your investment dollars. Looking for quality stock tips? Well, we may or may not be talking about Apple. We may or may not be talking about Google. We may or may not be talking about Disney. However, since we use our proprietary algorithms to screen, analyze, and rank over 6,000 stocks every week, we will be talking about timely investment opportunities. So you may often hear the name of a company you haven't heard of before, and you know what? That is often the best kind of opportunity, an opportunity to get in early before the investing masses. The Growth and Value Podcast is made possible by Connor Management Group, a registered investment advisor firm. Hi everyone, Mathis Connor here with Connor Management Group, and this week we're going to look at the best growth stock to buy right now. Today is Monday, October 6, 2014, and as we see here in the opening slide, this company is in the medical appliances and equipment industry, and we see its 6-month upside potential at 36.3%. Going on to the next slide, we see that the name of this company is Stryker Corporation. The ticker symbol is SYK, and once again, we see their 6-month upside potential at 36.3%. Stryker is in the medical appliances and equipment industry. On to their quick facts slide. We have a bit of a lengthy description for Stryker, but we think it's a great opportunity. Here we go. Stryker Corporation, together with its subsidiaries, operates as a medical technology company. The company operates in 3 segments: reconstructive, medical surgery, and neurotechnology and spine. The reconstructive segment provides orthopedic reconstructive implants used in hip and knee joint replacements and trauma systems, as well as other related products. The med surgery segment offers surgical equipment and surgical navigation systems, endoscopic and communication systems, patient handling and emergency medical equipment, and reprocessed and manufactured medical devices, as well as other medical devices for use in various medical specialties. The neurotechnology and spine segment provides neurosurgical and neurovascular devices that include products for use in invasive endovascular techniques, products for traditional brain and open skull-based surgical procedures, and orthobiologic and biosurgery products, as well as products for the treatment of acute ischemic and hemorrhagic stroke. Excuse me on that. The segment also develops, manufactures, and markets spinal implant products, including cervical, thoracolumbar, and interbody systems for use in spinal injury, deformity, and degenerative therapies. The company markets its products to doctors, hospitals, and other healthcare facilities in the United States, as well as sells its products through local dealers, direct sales, and third-party dealers and distributors in approximately 100 countries worldwide. Stryker Corporation was founded in 1941 and is headquartered in Kalamazoo, Michigan. So, that is a bit of a mouthful, but Stryker, as you'll find out, is a sizable company, and they do a lot of things. And you can imagine with the natural age of people living longer, that their products will become just greater in demand. So that's the description for Stryker. Their website is www.strykercorp.com. That's STRYKER Corp.com. They're headquartered, as I mentioned, in Kalamazoo, Michigan. They were founded in 1941. They have 25,000 employees. Once again, the ticker symbol is SYK. The sector they operate within is healthcare. The industry is medical appliances and equipment. Their revenues over the last 12 months totaled $9.3 billion. The net income totaled $687 million over the last 12 months. And their cash from operations totaled $1.9 billion over the last 12 months. And their market capitalization stands at $30.4 billion. So this is definitely a sizable company. On to the products and services slide. What we have here is kind of a bit of a repeat of that long, lengthy description. We have a picture of a slide saying developing breakthrough technologies, another one that says restoring blood flow, another slide that says advancing robotic arm assisted surgery with a picture of a robotic arm, and helping patients get on their feet, emphasizing their work in foot and ankle procedures. Also on the slide, we have description of their different segments. The medical and surgical includes bone cutting, surgical equipment, computer-assisted surgery. Their reconstructive segment includes hips and knees, trauma and extremities, foot and ankles, sports medicine, and their neurotechnology and spine segment includes spinal implants, interventional spine, as well as one or two other things I probably just would not pronounce correctly, so I'll pass on that. Going on to the next slide. Once again, the annual revenues for Stryker over the past 12 months total $9.3 billion. The net income totaled $687 million, and the cash from operations totaled $1.9 billion. So they generate quite a bit of cash. The operating margins for Stryker in 2013 were 21.6%, and in 2014 the operating margins are tracking at 30%. That is a very big increase in operating margins. Onto the valuation metrics. The trailing PE ratio right now is 32.5, and the forward PE ratio is 14.4. That implies that analysts expect earnings to increase quite a bit over the next 12 months. That's a large decrease from 32.5 to 14.4, something you want to see in a stock you're going to go long with. The PEG ratio is at 2.0, not too rich. The price to sales ratio is at 3.3, and the price to book ratio is at 3.4. And those figures seem reasonable to me when you consider how healthy their operating margins are. The enterprise value to EBITDA ratio is at 21.5. The recent closing price for Stryker was $82.51. The 52-week low was $67.04, and the 52-week high was $86.93. So the stock is definitely closer to its high than its low right now. The 200-day moving average is $82.71. The 50-day moving average is $81.89, and the 200-day average is around $80.90. So that's a pretty tight range, implying that there hasn't been too much movement over the last 6 months or so. The average daily trading volume is 1.3 million shares per day, so it is a well-traded stock, and the beta for the company is at 0.9. So the company is just ever so slightly less volatile than the market. So the market goes up, Stryker tends to just go up a little bit less. So the market goes down, Stryker tends to go down just a little bit less. The dividend yield stands at 1.6%. So it's a decent, respectable dividend. And the average dividend payout ratio over the last 3 years has totaled 30.6%. Going on to the price chart for Stryker, over the past year, Stryker has gone up 21.9%. Started out among its low in the mid-60s a year ago, and it's now in the low 80s, and the stock has gone up reasonably steadily over the past years. Had just minor ups and downs, but nothing overly significant. So just seems to be a respectable growth story from a price pattern trend. Also, let's see, just some other background information about Stryker. Over the past year, the company's been active with some acquisitions. The company acquired a company called Mako Surgical a year ago, and that company, the point of that company is to give them some upside potential in the robotic arm market. And additionally, they made some acquisitions that would give them additional upside potential in the hip and knee replacement markets. So Stryker has been active and acquisitions over the past year. Additionally, this company seems to have some nice upside potential. Its financial statement quality is excellent. Its operating margin trend, as mentioned, has increased substantially. And overall, right now, we don't see the market as being overly bearish or bullish right now. So we don't see Stryker receiving any headwinds or support in one way or the other. The recent closing price for Stryker, as mentioned, was $82.51, and our 6-month target price for Stryker is $112.45. So this company has the 6-month upside potential of 36.3%. So we think that this is an interesting play. At a high level, macro trends with increasing baby boom market of people retiring and getting older and needing things like hip and knee replacements and sometimes different kinds of spinal surgery. We think Stryker is very well positioned. So, for this reason, we believe that Stryker is the best growth stock to buy right now. We hope you enjoyed this presentation, and we'll talk to you soon. Take care. Bye. Hi, this is Mathis Connor from Connor Management Group, and I just wanted to take a few more minutes to give you some background about myself and Connor Management Group. First of all, if you enjoyed this podcast, and I hope you did, and you have been over the past few months or so, please write us a review on iTunes and Stitcher. We really would appreciate it, and it would help us get more subscribers. So that's something we'd appreciate. So for the podcasters out there, please go to Stitcher or iTunes, and for you guys on YouTube, I'd appreciate a thumbs up and like, as well as just becoming a subscriber to the CMG Stock Picks channel. All right, well, that's what I wanted to say with regard to the podcast and YouTubers. Hey, try to be efficient. But I wanted to share a little bit about myself. Basically, I've been told from some friends and listeners that know me that I could enlighten my audience with a little bit more about myself. So I'm not all that comfortable with telling about myself. I really kind of want you to enjoy the content. But for those of you that have an interest, this is why the stuff is all the way at the end. So, okay. My name is George Mathis Connor. My background is that I have a bachelor's in mechanical engineering from a place called Rensselaer Polytechnic Institute, engineering school in upstate New York. A master's in engineering from Cornell University, also in mechanical engineering, and I have an MBA in finance from the University of Chicago. So hey, that takes care of my educational background. Basically, bottom line is to say, yeah, I did a lot of schooling. What my career experience has been to date. I started out my career as an engineer, did a few years of that. Worked on a lot of cool landmark renovation buildings in New York City for a few years. One of the most high-profile ones was my company, or I should say the company I worked for, was part of the renovation team of Grand Central Terminal. So for those of you that passed through there, I've spent a number of years in and out of every cranny of that building and facility. I also worked as a banker in New York after I got my MBA, and basically I worked on financing a lot of large-scale infrastructure projects, mostly power plants, but I worked on some basketball arenas as well, and some chemical plants, and even some coal mines. I've been deep down in the ground a number of times in my career. Additionally, let's see, after that, started working on the investment side of developing power plants, and particularly I spent most of my career with a company called Enron and another company called GDF Suez, where I worked on the development of power projects where where I acted as a equity investor for whether we were going to build them or buy them or sell them. And after GDF Suez, I am now an investment manager. And basically, I've been studying deals over the years, learning to build complex financial statements, always evaluating them, the cash flows and making sure that these things would be profitable. And investing in the stock market was always a hobby of mine that I took more and more serious over the years. So after a bunch of time, I just, I'm really going to go after this. And so I spent maybe about, say, 3 years actually working on the development of some proprietary algorithms. I was just convinced that with my mathematics and computer background, coupled with all these financing deals, of which I became very good in with accounting and finance, I thought that I could at least find one way of consistently finding stock opportunities. So it was the development of these proprietary algorithms and me having some success with them that led me to the development of Content Management Group and the development of all these videos and podcasts you've been seeing and hearing. And, I am pretty happy with these algorithms. Basically, they review, analyze, and rank over 6,000 stocks every week. They're pretty comprehensive and pretty thorough. The algorithms use fundamental technical analysis and also consider some macro level measures. And another thing that's pretty unique is that these algorithms estimate future stock prices with specific time horizons. I haven't seen too many people on the web that will give you a potential stock price, say consistently say this is what we expect the price to be in 6 months, or this is the price that we expect there to be in 12 months. And I think for most of the videos and podcasts that I produce, you've always heard me give a potential stock price going 12 months out. The premium subscribers actually give them a stock price for the top stock prices for 6 months out. So that's about what I have to say about the algorithms. Additionally, about Content Management Group, our primary offering of CMG LLC is that we are a managed account service. And basically, a managed account, for those of you who don't know, is basically a more hands-on, customized way of investing for the long term. It's basically a complement or a supplement to 401k or IRA and it has more benefits. And basically, you probably haven't heard of these as much or over the years because they've just become a lot more available to middle-class investors. And that's primarily because of advances in software for being able to handle many clients and move them in and out of custom portfolios and options. So if you want to know more about our managed account business, please go to ConnorMG.com. That's www.connormg.com, or you could go to our website and you can see a presentation that compares Content Management Group side by side with other managed account providers. E-Trade provides managed account service, Fidelity does, a lot of other mainstream firms. And like we said, basically now that technology is advanced with software, it's a lot easier to manage. So basically, as with E-Trades, the minimum size of account we open, say $25,000. And while as I'd say 10 years ago or more, minimum account size was probably $500,000. So there are a lot of changes, and you'll be hearing more and more about this account service, as time goes by. Additionally, additionally, you can get to know us through our social media footprint. Basically, we have a presence on all the major websites for your convenience, and there you can get a lot more articles and hear about different points of view on things going on in the market. So we have a presence on Twitter, Google Plus, and Facebook, as well as LinkedIn also. So you can be kept abreast about thinking on stock investing, as well as things we share by others who we consider thought leaders. And finally, CMG offers 2 newsletters, both weekly, 2 weekly newsletters. One is to keep investors up to date about relevant news and provide in-depth analyses on a quality investment opportunity. And those opportunities are consistent with the free weekly podcasts and videos. And the other newsletter we provide is our premium newsletter, and that one provides the latest top picks from our proprietary algorithms that we run every week. So, feel free to go to cmgstockpicks.com, and you can go there to subscribe to the newsletters. And if you go to the website, you can also view this deck and or any of the decks going forward, and there'll be a link there to everything I've just talked about. Basically, everything from the podcast to the newsletter to the presentations about our managed account service. So, hope this was helpful. Nice overview. Hope it didn't bore you. You can listen to this a couple times. That's why I put this at the end of the stock presentation. And I'll talk to you soon. Take care. Bye.